All right, welcome back. We got our stock market update and we have another all-time high, and we just finished the best month since 2020. So congratulations to every shareholder out there. This has been a fascinating year, to say the least. We had so much pain at the beginning of the year, followed by just so much euphoria, and it's just the whole market just completely flipped on a dime here. So we're just going to go over some charts today. This week we had a lot of technology earnings. I'll do a deep dive on some of these names, but I can't stress enough at how great these big technology names are, and we'll get into some of that today, but we'll go on a deeper dive in separate videos. But looking at the NASDAQ here, we are up 20% since our March low, and I mean, of the 30 days of last month, we only had 2 or 3 red days. Just a lot of green candles here, and just pretty phenomenal performance here for the technology names. S&P 500 looks like the same thing here. Let's go ahead and take a look at oil, because it hasn't done a whole lot. We're just still hanging out at this $100 level. So, you know, the market doesn't seem to care anymore about high oil prices, and we have seen inflation tick back up, and we have seen obviously the chance of rate cuts is dwindling. The 10-year yield, so interest rates are staying elevated as well, and we did have our last FOMC meeting this week. So the Federal Reserve, they did not raise, they did not cut, and this was the last time that we'll hear from Jerome Powell in these meetings. The new Fed chair will be taken over here soon for the next meeting. All right, let's go ahead and take a look at volatility, because this is a chart we don't look at too often, but when I bring it up, it's a good thing to pay attention to. So, you know, I've had these boxes here, this green box and the red box, for a very, very long time. The saying goes, when the VIX is high, it's time to buy. Anytime the VIX is in this green box above 28, you got to buy something. And, you know, we've had only a few good opportunities, but when these opportunities arise, you got to buy something. And you've seen that where the market will have these crashes, and then it just immediately bounces out of that because there's so much money that needs to get allocated. There's so many forced buyers with 401ks, and anytime there's a panic in the market, money just comes in and buys up the dip. So we had some opportunities here in March, and this was the time to take advantage. Now, when the VIX is low, it's time to go. So that doesn't mean sell all your stocks, but when the VIX is under 18 and 15, you don't really, in my opinion, want to be buying a whole lot of stocks, just because the volatility is low. The market is typically at a high, and you want to buy when there's panic and there's mispricing in the markets. Now, there could be individual names that move off of earnings, and you're a long-term shareholder, you still like the story. There's one-off cases here and there, but when the VIX is high, I'm an aggressive buyer. When the VIX is low, I'm a very patient buyer, and this is where I'm looking to accumulate cash, put money into my accounts to be ready for when we have these green opportunities in the VIX, and this is when you need a strike. This is one of the easiest ways to build your portfolios, is just wait for there to be volatility in the market where people are getting margin called, when people are getting shaken out of positions, and you can come in and buy blue chip, high quality names when there's a panic, and then take advantage and wait for the recovery. That's exactly what we just got in March. All right, so let's take a look at Nvidia first. So Nvidia has earnings here in a couple of weeks, but they did hit an all-time high of $216. All the semiconductors are on an absolute tear. The AI story, I don't know how you can be an AI bear anymore. I mean, the thesis to me for the bear case for AI is completely been destroyed, especially with these earnings that we keep seeing over and over and over again. These companies are making so much money from their standalone businesses, and they're reinvesting the profits into AI, and all that money that Amazon and Google and Meta that they're spending, that is going to the rest of the market. And you're seeing all these companies, their earnings are starting to grow, because in the past, Microsoft and all these companies, they'd have so much free cash flow and they would just buy back their own stock. Now they're taking their money and they're giving it to everybody else, and those companies are able to then give that money to other people. We can go down the stack of companies, Caterpillar, AMD, you know, all these companies that are involved in building things are just skyrocketing. So it's a pretty interesting switch that we've seen in the market, because for so long you'd see money going from consumers to these technology names that had very low operation expense, and they would just hoard that capital and buy back their own stock and pay their employees tremendous amounts of money. That money didn't move very much after the money goes to these big tech companies. Now you're seeing increased dollars going to these technology companies, and that money is spreading all over the place, and that is really good for the overall economy, just because there's more activity going on. So that's another reason why we're seeing the S&P just move at such a tremendous pace, is there's so much money that's being moved down the stack. It's not being hoarded up at the top at these big seven technology names. So Nvidia looks interesting here. We peaked above 215. To me, this looks bearish on the short term. Long term, Nvidia's phenomenal, and I can't wait for them to blow out their earnings and give incredible guidance. We know what's going to happen, but I do think it's interesting that we're seeing another pullback here, potentially on Nvidia. We've been chopping around here. We've peaked above this $200 level before, and we've sold off. If Nvidia sells off, I've got this green box here ready to roll. I'm going to be buying more shares here on this 180 level. If it gets lower than that, I'll be buying some more. All right, let's take a look at Google. Google may be the most complete company in the world. Just phenomenal business. The entire stack of products they have, they're very diversified, and they just reported their earnings, $109 billion in one quarter, and they guided for $115 billion for next quarter. Just phenomenal. I mean, Google is up 40-something% already, 40% in a month, and this is the second or third largest company in the world. I think Google's going to take over Nvidia's spot for the number one largest company by the end of the year, no doubt. This is just a phenomenal business, and they have a $400 billion backlog of customers that are committed just to their cloud business. $400 billion. It's just unbelievable what these companies are doing. So congratulations to Google shareholders. Keep holding this phenomenal business. Microsoft, different story here. They did have their earnings this week, $83 billion in revenue this past quarter, and they are guiding for 87. So a lot slower growth here. The cloud is still doing great for Microsoft. I still need to listen to their call, but this is one of the companies, because they don't have chips, because they have software that could be disrupted by AI, and their cloud isn't growing as fast as some of these others. The market isn't as enticed here. I think there's tremendous value in Microsoft. I think a little pullback makes sense because we came from 350 all the way up to 430. I like this pullback here and the instant snapback that we got from this $400 level. I think Microsoft gets to 450 within the next couple of months, and then where we go from there, we'll have to wait and see. But I've been buying more of this company these last couple of weeks. This is a new position for me, and this is a long-term play. Really like the foundation of this company, and we'll have to wait and see. But this is not the hot stock in the market. You've got Google and the big dog here, Amazon. These are the hot stocks where the money is plowing into. So let's see here. Amazon, $181 billion this quarter, double beat here, and they are guiding for $194 billion. So this company will be the first company to reach $1 trillion in revenue for the year. That will most likely be maybe 2027, 2028. That's been one of the bull thesis for Amazon that I've had for a long time. They just make so much money. The problem with Amazon, if you had to pick one, is that their free cash flow is dwindling. The amount of cash that they have left over, they keep reinvesting into other parts of their business. So the amount of free cash flow that they have is almost flat. So it's been slowly dwindling down. I think they had $40 billion in free cash flow in 2014. They're down to about $5 billion, I believe. So to me, that's great. I want them to keep reinvesting. That's how they built AWS. That's how they keep building out these other segments of their business that are increasing their revenue. Amazon now has a $20 billion chip business. Just like Google, they make chips. They have cloud. They sell you deodorant. They've got a streaming service. They do it all. They've got so many things going on. Robotics. We can go on and on and on. The satellites. This is a monster company. And because of these companies' ability to reinvest their profits, that's how they can build these just giant conglomerates that have multiple businesses underneath one housing of the company. So just so much to like here, and it's just so exciting to see the stock finally move, because we've just been going sideways since 2024. But I think this stock, I've been saying for a long time, is a $300 stock, and we are knocking on the door there. All right, we talked about Tesla. No, we didn't talk about Tesla last week because I was gone. Tesla had earnings, and their numbers were much better than I expected. They had revenue of $22 billion, and they are guiding for $24 billion. Pretty lackluster call. We're kind of in this weird spot for Tesla where the automotive business is really stalling out here. It's staying steady. Energy business was kind of flat, which is a surprise. And we're waiting for those other bets on robots, full self-driving. We're waiting to see some progress on those, but just like anything Elon does with Tesla, it's always slower than expected. So we're still waiting to get some substantial updates there. But the chart looks, to me, it looks a little bullish, but we're still kind of in this no man's land here. I could see us rejecting. I could see us pushing up if the market keeps going, but if the market pulls back, because we've been so face-ripping hot and the market is probably due for a little bit of a pullback, it wouldn't surprise me if Tesla sells off here. All right, what other names? Meta. So Meta is in the camp just like Microsoft. Phenomenal earnings, but it's not a very loved stock right now. So Meta reported earnings of $56 billion. They double beat there on earnings and revenue, and they are guiding for earnings of $60 billion for the next quarter. Meta is growing their revenue 33% year over year. Phenomenal growth. They have over 3 billion daily active users across their suite of apps. I mean, again, it's just insane what these companies are doing. But the stock dropped, I believe, 10% after their earnings. They did increase their CapEx, and their AI rollout is a little slower than expected. To me, I like what this company is doing. They're making some odd bets, and they're going a little slower when it comes to the AI race, but they're also spending a lot of money. So they're kind of in this weird spot where it's like they're making all these bets, they're spending all this money. The traditional business is really doing well, but these other bets just haven't been paying off yet, and we're waiting to see some of that payoff. I think if you're a patient investor, this company makes sense under $500 to start a position. Long-term trend is still respecting this green line that I have here, but I do expect a lot of chop, and I don't expect this stock, similar to Microsoft, I don't expect it to be the belle of the ball anytime soon. So this one you got to be patient as well as Microsoft. All right, Apple also reported earnings. Haven't listened to their call. They're just a steady beast, Apple. $111 billion in revenue this past quarter, $106 billion projected for next quarter. They're not spending a whole lot on AI. They're going to just sit back and wait to integrate different models into their devices. But when they do, look out. It's going to be a monster. I actually wanted Apple to drop because I have no exposure to this name, and I wanted to pick up some shares on the cheap. I don't know if we'll get that. To me, it looks like Apple wants to hit all-time highs, and then who knows where we go from there. But such a large company, just, I would say this is the most expensive of all the Mag 7 names that we've talked about. I think Meta and Microsoft are the cheapest valuation-wise. Google's getting somewhat expensive, but Apple is definitely the most premium valuation of the group that we've talked about. So I need to get this on the discount, but even if you were to buy it here and wait 5 years, you're going to be happy. Any other names we want to talk about? There's so many semiconductor names that look like Intel that are just unbelievable. Intel, we can look at ASML, we can look at Qualcomm, had really good numbers. So all these semiconductor names are just going absolutely ballistic. And that's just because there's not enough chips. There's not enough compute, and there's not enough power. And you're seeing names like Bloom Energy that provides power just going just insane. So these things don't even have any pullbacks. They just go straight up. So that is really all I got for this video. It's just a wild market we're in, and not a whole lot to do other than look at your portfolios on these big green days. So I will do a deep dive into some of these technology earnings because I do think it is, if you're skeptical on AI And if it's a bubble or not, you got to look at these numbers because these are just unbelievable. And I don't see this slowing down anytime soon, with companies like Google reiterating that they're going to spend more in 2027. And that's the same thing with Amazon and Microsoft. So we'll do a deep dive in those names. Longer video today since I was out last week. And I hope everyone had a good couple of weeks, and we will talk soon. All right. Peace out.